Palantir is reporting their second quarter earnings August 4th, and with a 423x forward PE, there's zero room for error. The stock's already up 110% this year, and we're only halfway through 2025. My name is Rick Orford. I've been trading since 1999, and I'm not a financial advisor, which is great because that means I don't trade headlines. I look at margins, revenue breakdowns, and of course, momentum. But here's what most people are missing about Palantir. U.S. commercial revenue just hit a $1 billion run rate. Margins 44% adjusted, and there could be a slowdown in sight. And at these valuations, meeting expectations may not be enough. Throw in analyst skepticism, a crowded AI market, and a deceleration risk, and this earnings report could trigger fireworks either way. So does Palantir blow past expectations, or is this where reality starts to catch up? Well, let's get right on into it. Now, before we dive into the specifics, we need to understand where the company stands in terms of the market. Palantir stock has been on an absolute tear in 2025. In fact, the stock has gained almost 110% on a year-to-date basis. I mean, we're not even through the second quarter of the year, and the stock has more than doubled. By the way, if you want to follow along, go ahead and scan this QR code to see Palantir's financials. All right, so going back, Palantir's valuation implies that investors have priced the stock for perfection. Assuming earnings remain constant, it would take years for investors to recover their initial investment. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/ricko to get your 10 stock picks right now. Right now, Palantir's forward PE is over 423 times forward earning. But what's really driving this extremely bullish sentiment? It's Palantir's position in the AI enterprise market and huge military modernization efforts by the government. But analysts, they don't seem to be excited about it or Palantir. Out of 21 analysts, the vast majority rate Palantir as a hold, while only 4 rate them a strong buy, and the remaining rate the stock either a sell or a strong sell. Personally, I think this mixed opinion reflects Palantir's undeniable growth and eye-watering valuations. But what do you think? Now, there's several metrics that you need to focus on once Palantir drops its second quarter report, and it's been a hot topic on my Discord server. First and foremost should be the company's revenue growth breakdown by segment. In its first quarter, its commercial revenue increased 71% from a year ago to $255 million, while government revenue jumped 45% to $373 million. The U.S. commercial business, though, is where the real action is. In the first quarter, this segment crossed a $1 billion run rate for the first time. Now, here's the movements you want to watch out for in Q2, because any deceleration could trigger a negative reaction from short-term investors. Operating margins are also something to look at. In the first quarter, Palantir's GAAP operating income was $176 million, which translates to a 20% margin, while adjusted metrics reached $391 million, translating to a 44% margin. Now, any compression in these margins would be a huge red flag, especially given the company's current valuation. And of course, investors should also keep a closer eye on Palantir's AIP adoption metrics. Although there hasn't been much word about the conversion rates, management has been hosting AIP bootcamps where potential clients can develop actual functioning AI for their own operations. The conversion rates from these bootcamps will directly translate to future revenue. Okay, so what about the targets that everyone's going to be watching? Well, for the second quarter of 2025, management issued revenue guidance between 934 and 938 million. The midpoint is 936 million, which translates to about a 38% year-over-year growth rate compared to the second quarter of 2024. Though it is a bit lower than its recent 39% revenue growth, I don't think that this is something to worry about, at least not right now. Palantir also expects an adjusted income from operations to come in between 401 and 405 million. And that would represent about a 59% growth rate from the second quarter of last year. With how things are moving with Palantir, I think this target is absolutely possible. Now let's talk about what the analysts expect. Wall Street is expecting earnings per share to come in around 8 cents, which is up 166.7% from the 3 cents a share in the same quarter last year. For the full year, management has also issued its revenue guidance to between 3.89 and 3.9 billion, representing approximately 36% growth rate for the entire year. Now, there is one thing I'd like you to take note of. Palantir expects full year revenue to come in over 1.178 billion from its U.S. commercial segment alone, representing at least 68% growth in that segment. That is a significant increase. So if Palantir misses guidance, the likeliness of hitting the overall revenue target would be much slimmer and would probably affect the stock price. So again, watch out for Palantir's U.S. commercial segment. But looking at Palantir's market position, hitting these targets I think is definitely possible. That said, simply meeting expectations at this point may not be enough for these valuations. Palantir might need to report market-beating numbers for the stock to climb even higher. Apart from the numbers, some other developments could definitely move the needle. One is Palantir's recent partnership with Accenture, which involves training over 1,000 Accenture AI professionals on Palantir's platform. This means federal market expansion for Palantir without having to scale its own workforce. This is very smart. The next one is, of course, the AIP bootcamps. It's a significant growth driver for Palantir. Management has been vocal about the success of these bootcamps in converting prospects into customers. So watch out for specific metrics on conversion rates and the opportunities that they're building through these bootcamps. Now, on the government side of things, Palantir might benefit from the current administration's focus on efficiency. Sure, there is an ongoing reduction in military spending, but there's also enormous defense projects like U.S. President Donald Trump's Golden Dome, and Palantir has a long-standing relationship with the U.S. government, so it's very likely to benefit from these defense upgrades. Palantir's international expansion, however, well, that remains a bit of a question mark. CEO Alex Karp has been direct about challenges in Europe, as the market is not yet fully embracing AI, so commercial expansion here could be a bit challenging. That said, any signs of improvement would be a positive catalyst for Palantir and their shareholders. Now, with all that out of the way, what could possibly go wrong with Palantir? Although I really don't measure high-growth stocks with a PE ratio, many investors are concerned about Palantir's current valuation. And for me personally, I am closely watching for any potential deceleration. Again, the management's guidance for revenue and adjusted operating income for the second quarter translates to a lower growth rate compared to the first quarter, which potentially means a deceleration from prior quarters. But the setback seems tiny at this point. But it is a big deal because with Palantir's current valuation, any stumble could trigger a major price correction. Personally, I'd be looking for revenue growth of at least 30% and commercial growth in the US above 60% at a minimum. Any positive surprises here would be huge next week. Operating margin should hold steady or expand slightly, and most importantly, it would be a good sign that Palantir will raise its guidance for the full year. And that's it for me. What do you think Palantir will report next week? Let me know in the comments below. Will they beat? Will they raise again? Or is this where the music stops? And hey, if you found this analysis valuable, don't forget to hit that like and subscribe button for more. Thank you so much for watching, and I'll see you next time.